What does the US President Donald Trump's diagnosis for COVID-19 mean for the UK investor? Coming up in this video, my hot take on Donald Trump's diagnosis and its likely impact on the stock markets, both globally and here at home in the UK. So overnight we discovered that US President Donald Trump has tested positive for coronavirus, along with the First Lady Melania Trump. Donald Trump announcing the news tweeted, "Tonight, Flotus and I tested positive for COVID-19. We will begin our quarantine and recovery process immediately. We will get through this together." Now, the 74-year-old US President is overweight, according to his latest medical report. He's actually clinically obese, and he is in a high-risk group for COVID-19, for coronavirus. So what does his diagnosis mean for the typical UK investor? I think it's fair to say that the US presidential election was already having some influence on investor sentiment. Investors were generally nervous about the outcome of the election, whether it would be a decisive victory for Trump or for Biden, or some sort of contested result. There's been some words recently from the president suggesting he may not take it lying down if he does lose the election next month. So some interesting times already for investors because of the US presidential election, and of course the debate earlier this week just really firing up investor sentiment too. But it's important to remember that the US presidential election is not the only factor weighing heavily on the minds of UK investors right now. We had our regular Informed Choice Investment Committee meeting this morning via Zoom. We're still not together in the office, and the election was one of several factors brought up as really influencing investor sentiment currently. So as well as the election, of course, we've got COVID-19 more generally, rising cases here in the UK and also across the world really. So the search for a vaccine continues. We don't know when COVID-19 will allow the economy to fully reopen, and talk at the moment is of around 6 more months of the current status. In the UK, that means local lockdowns. Around a quarter of the UK is currently locked down, and globally we're starting to see lockdowns being reintroduced in some places. Paris in France, for example, is understood to be going into a full lockdown next week. So COVID-19 a big factor along with the presidential elections. And then of course closer to home we have Brexit rumbling on. The deadline for trade talks coming up, and trade talks, whilst ongoing, don't look like they're going particularly well for either side. The EU is now taking legal action against the UK for its internal markets bill, and it seems unlikely that trade deals will be struck when that internal markets bill is hovering over the EU. So some difficult times ahead for investors, and that was before we got the news that Donald Trump has tested positive for coronavirus. Now, one factor we consider when we look at the expectations for market volatility is the VIX index, the VIX index, otherwise known as the fear index, and that has risen by about 7% in the last 24 hours. It's currently around 28, 29. When the VIX index gets to 30, historically a level of 30 tells us that some major market volatility is coming down the track, and that can be either down or up, but market volatility nevertheless. So VIX is something we're keeping a close eye on amongst other market indicators too. Now, it's not the role of a financial planner to predict how investment markets are going to behave or what the economy is going to do next, but we do have to consider the impact of investment market movements within our clients' financial plans. I think it's fair to say that investment market movements tend to be short-term things, and financial plans should be long-term things. So trying to get the right balance between the two, what's going on in the very immediate, the short-term, hour by hour, day by day, is often very different to what's happening over a lifetime of a financial plan, over tens of years, if not up to 100 years for somebody's lifetime. But the Trump diagnosis adds another layer of uncertainty to already uncertain investment markets, and when you add that to the uncertainty that's already abound in markets, it's likely to lead to a period of increased market volatility. And of course, the diagnosis is likely to be very disruptive with the upcoming US presidential election process. Polling day on the 3rd of November, so just over a month away, a month tomorrow. And we've already seen a very heated presidential debate this week where President Trump and former Vice President Joe Biden traded blows on stage, verbal blows, I have to say, resorting to name calling, some very embarrassing moments for both men, particularly for Donald Trump, who it seems refused to call out white supremacists. economists during that debate. So in some respects, and one of my colleagues in Informed Choice said to me this morning, this might actually work in his favour. If this 2-week quarantine period, which could well be extended if he starts to develop symptoms, if that quarantine period is extended and means that he misses 1 or 2 of the next 2 presidential debates, that could actually work in his favour. If he can't stand on stage during a debate, he can't say anything stupid. He may also get a small bump in the polls from the sympathy vote, but currently he's around 7 points behind Joe Biden in the poll of polls, so even a small bump probably wouldn't make that much of a difference. But it just adds an interesting dynamic to an already very interesting presidential election process. And today I've already seen people drawing parallels with the COVID-19 diagnosis for UK Prime Minister Boris Johnson. Of course, when he was diagnosed, he had mild symptoms, and then just over a week later was admitted to hospital for tests, was admitted to hospital, and then ended up in intensive care in the space of a day. So if we saw a similar pattern for Trump as we saw for Johnson, and remember, of course, Johnson is 18 years younger than Trump and probably arguably in slightly better health. I've never seen photos or video of Trump doing any form of exercise with the exception of playing lots of rounds of golf. I don't know if he walks between holes or jumps on the golf buggy, but I think we've got to remember that the risk associated with COVID-19 for a 74-year-old male who is obese is rather high, somewhere around 6 or 7% mortality risk. Now, of course, as president, he'll get access to the best healthcare in the world, but there's still a risk. And should Trump start to develop symptoms in the next week or so, should he be admitted to hospital, I expect that to have a major impact on investor sentiment, and we could well see some extreme market volatility off the back of that event. The Democrat-controlled House of Representatives has voted through a $2.2 trillion package of economic stimulus as their next round of pandemic economic stimulus monetary response, and that is unlikely to be affected at all by Trump's diagnosis. What will be interesting, however, is to see how that round of stimulus balances with Trump's diagnosis. It could soften and blunt the market response slightly. So whilst we may have seen a more dramatic market response when stock markets open in the US to Trump's positive coronavirus diagnosis, that could be slightly offset by this huge package, this $2.2 trillion package of economic stimulus. So my hot take on this as a financial planner hearing the news about Trump's diagnosis, I think investors should be prepared for a fairly intense period of market volatility over the next 7 to 10 days, depending on how that illness pans out, whether he remains with no symptoms or has mild symptoms, or worst case scenario is admitted to hospital or even intensive care or worse. So watch out for that, but do remember that your financial planning should be a long-term thing, and the investments should be a supporting factor for your financial plan. So try not to react to short-term news, market movements, market volatility. The job of a good financial planner is to coach our clients through these bouts of volatility, because over the long term, markets do tend to rise in value. I know they go through a bit of a roller coaster ride to get there sometimes, and it can be scary as an investor to watch that volatility. But really, financial planning and investing money is about the long term, not the short term. Thank you for watching this video. Hope you found it useful. Do subscribe for more, press the like button as well, and leave your comments below. What do you think the impact will be of Donald Trump's diagnosis on investment markets over the next week or two? What factors are you considering currently within your financial plan and your investment planning? Thank you for watching.